Welcome to Holistic Accountant Podcast, where we aim to showcase how adopting a holistic approach in accounting and tax maximizes value for clients. Beyond traditional tasks like preparing financial statements and tax returns, a holistic accountant focuses on offering advice that maximizes personal wealth on an after-tax basis. If you enjoy this episode, please consider leaving a rating and sharing it with those who might also benefit. And to ensure you stay updated, subscribe to our weekly email. The link is in the show notes. Okay, today Mena and I would like to talk about a case study, a client that we've been working with over the last couple of years that when we reflect on the journey just over even the last couple of years, we've helped them with a lot of different things that I think falls outside of kind of the traditional accounting relationship. You know, traditionally it's prepare tax returns and financial statements and BAS and all that sort of compliance work. But the reality is that most people want to achieve financial security and they're in business for a variety of reasons. The predominant reason might not necessarily be to make money, to achieve that financial security, but for most people it's a necessary outcome. Okay, so our view then is to really understand what that looks like and then help the client achieve that goal. So it's really a little bit deeper than just saying, well, how much money do we want to make this year? And certainly deeper than, okay, how do we save tax, or what are the tax compliance obligations that we need to fulfill? Now, of course, all those things are important questions, but if we go a little bit deeper than that, it's okay, we're going to buy this business or start this business. What do we hope to achieve, not only from a business perspective, but what are the personal outcomes as well? And by having a deep understanding of what that looks like, and it doesn't have to be, super detailed, because it's difficult for people to really set those longer term goals, because of course it's all dependent on, well, how will the business do and how quickly will it get up to speed and those sorts of things. But just a general view, at least some idea where a client is heading, and then that can create lots of opportunities then for us to add value. And so what we wanted to do today is share some of the things that we've been working on over the last couple of years where I think we've really added substantial value. And the aim of sharing this case study is to hopefully demonstrate how a holistic approach can harness a lot more value for clients.
So this client came to us in about, I think it was December 2022, and this particular client had been in the industry for 20 plus years, so he knew it very well. And the business opportunity came, and at the onset there was a little bit of a reluctance as to why we would need to do a due diligence, given that he knows the industry well, he knows the ins and outs and so forth. But we eventually convinced them why a due diligence is required. We need to vet the financial figures, we need to vet the lease agreements, we need to ensure the employment contracts are in place correctly, account for the leave liabilities and so forth. All these things, aren't necessarily discussed when brokering a business transaction. And, due diligence also covers things such as, competitors and, key man risks and key client risks as well. So we conducted this due diligence with the client, gave them a bit more assurance around the business and a bit more bargaining power when it came to negotiating with the vendor. The next thing we did is we structured the business, and admittedly we structured it terribly because we knew what we wanted to do in the next 5 years when he got a few more trading years under his belt and wanted to get funding to finance a property. So we purposely structured it bad so that we can restructure it in a couple years time when you had 2 years trading history, and re-gear it and actually convert basically what would have been non-deductible debt into deductible debt. So we've basically saved them a lot of money by doing so.
And I think it's important to note, Mena, that you've got to be careful around doing this. Okay, because if the ATO will say the sole and predominant reason of the structure that we chose was to avoid or save tax, that will fall into the anti-avoidance provisions. That's certainly not what we did.
Definitely.
We have an argument to demonstrate why we chose the structure that we chose. In fact, it was a pre-existing structure. And we also have an argument of why down the track we're going to fix it, which I'll talk about in a second. But it is very important that these things are approached properly to make sure that you manage any compliance risks.
The next thing was setting up accounting systems. Now, in these types of businesses, or particularly this industry, accounting systems weren't always up to scratch. In fact, when we did the due diligence at the start, getting financial records was like pulling teeth. So, we set up a pretty proficient accounting system. We put them on Xero, put them on receipt-based software to categorize all the expenses and so forth. And we assisted them with the bookkeeping and payroll and so forth. We ensured that they were compliant, everything was being accounted for correctly and accurately, and more importantly, they were getting live financial data to assist them with their business decisions. We're giving them monthly management reporting and so forth, and that's paid huge dividends because it's allowed them to focus on the business itself rather than, the financial side of things or, managing the payroll side of things, which, as we all know, can take a whole lot of time. So with the management reporting, we identified things such as, they had a high concentration with one client, which obviously is a massive risk. It allowed them to go broker with other clients, get new contracts through the door. It allowed them to focus on their margins. It really improved the overall business profitability. I think when they first came to us, the business was doing only a couple $100,000 in profit when they first bought it, and now they're getting close to $1 million annually. So it's a big turnaround.
And I think the learning there, Mena, is it's a real difficult balance between not just delegating the financial management of your business and having no oversight whatsoever, because that's not really the right approach. But it's also not the right approach for most people to get into the weeds, to really get into the detail, the nitty gritty. And for example, sometimes people think, oh, well, I don't really need a bookkeeper. If I can learn how to do it myself, I'll save on that cost, which is true. There might be a saving there, but at what cost does that come to you? Not only from, is that a good use of your time, but do you have the skill and specialization to do it and do it properly? Or do you end up sort of creating more problems for the accountant to fix than you're solving in terms of the saving? So as business owners, I think it's really important we understand the financial sort of metrics of the business, the performance, how things are structured and maintained. That's a really important thing. At the end of the day, you're the director of the owner of that business. You must understand these things, but also understand where your time is best spent. And it's really about building a system, an accounting system that kind of runs without you, that generates real-time information that's accurate. And if you can implement that, which is what we've helped implement in this business, it frees you up to sort of focus on the key things, but also gives you the information to know what to sort of focus on. So that's the sort of first step that we've helped them with over the first sort of 1 to 2 years of running this business. But as I said, and Mena's highlighted, their goal was to go and buy a family home. And we knew that sort of from the start. So we're kind of at that point now where, we've got a bit of history under our belt. We feel very comfortable that we've got a predictable level of profit and cash flow so that we can sort of take on that commitment. The next step then is making sure we work with an experienced mortgage broker that is experienced in these sorts of transactions. And it's really a combination of right information, right broker, and that broker chooses the right lender. And if you can make good choices or hit on all three of those things, the probability of, achieving your goals, that is being able to borrow what you need to borrow, is much, much higher. And so we've worked with this broker. We've had to prepare some projections for this client because, of course, they don't have, many years of history. And we've been successful in making sure we're going to be able to get the finance we need after we've only got about 18 months of results to bank on. And remember, they bought this business. The business wasn't doing so well. As Mena highlighted, the profitability was substantially lower than what it is today. So it's a really good outcome of making sure we've got those systems, we've got those information. And I think the benefit of having a network of people that you can rely upon is critical as well. As Mena highlighted, we're going to restructure their business. As a result of restructuring their business, more than 70% of the debt that they're ultimately going to use to buy this home will become tax deductible. The annual tax saving on that is more than $66,000 of tax saved. So, again, people look at sort of accounting relationships and results, and sometimes, they lament them because they get a tax bill every quarter and they think, I've got to, pay all this money to the government. What am I getting in return? I get that. But again, if there's scope, if the team has enough knowledge of, structuring and these sorts of things and enough knowledge of where the client's heading, it does create opportunities like this where not only you can hit on a massive lifestyle goal, which, the clients are thrilled with, like to achieve this outcome, they're thrilled, of course, but to achieve it in a tax effective way that's going to save them over $66,000 a year in tax liabilities, that's just icing on the cake, if you like.
So basically, what do we take from this situation or from this case study? What I would basically learn from it is, you need to work with someone that looks at the long-term picture. What are you actually trying to achieve? What are your goals? Because any accountant can set up a structure, any accountant can run a basic due diligence, or I'd hope they do anyway. But it's more so, what are the goals here and how can we use what we have in place now to work towards that goal. By setting up the structure the way we did, by doing the management reporting, it allowed us to do those cash flow forecasts that Stuart mentioned, to provide to the broker, that allowed us to get the borrowings. Having all these sort of systems and processes in place and working with someone that's trusted and knows, who wants to be with you sort of throughout the whole journey is really critical here, because otherwise you're just basically, all you're getting is a compliance-based product.
And it gives us more satisfaction, to be honest, as a very selfish sort of viewpoint. If we prepare a set of tax returns and financial statements, that's what we do. We're more than happy to do that. But if we get ourselves into a situation where we're able to provide a client advice like we have with this case study and help them achieve a lifestyle goal like that, it gives us a tremendous amount of satisfaction as well. So it's a great outcome for all parties. The other key learning, I think, is get out of your holistic accountant's way. Stick to your knitting. You're in a business. That's your core business. That's what you're enthusiastic about. That's where you've got your knowledge. And let the accountant do their thing, So again, now I understand, when you start a business or you've had a business for many years, it's kind of your baby, it's your child, and you want to look after it and you want to be involved. And I think as I said previously, you've got to have, a good understanding of the financials and the situation. But at the end of the day, you're paying professionals to deliver results. So I think in that regard, if you've chosen the right professionals, it's really about handing it over to them and saying, okay, let's design an accounting system here and let's get all the resources, whether in an external bookkeeper or whatever it might be, to make sure that we're going to achieve the most efficient accounting function possible, I should say. But sometimes clients get in the way of that and, sometimes think, oh, well, I'm spending a little bit more money here. It tends to be incremental, by the way. The additional cost to run a great accounting system versus one that's terrible, they don't cost that much different. So it's not a huge investment to achieve some great outcomes.
And lastly, networking is probably the most important. A good holistic accountant would have a bunch of contacts that can refer you to outside their scope of work. Like Stuart mentioned before, it's good to stick to your knitting, and as holistic accountants, we need to stick to our knitting, but there's going to be stuff outside our scope. So it's really important that your holistic accountant can refer you to people such as lawyers, brokers, people that can conduct good demographic analysis of certain areas for your business, people that they've used in the past for themselves or for their clients and so forth, because at least it gives you the assurance that these people have been tried and tested, and that the work that they produce will be the right type of work that you need.
And I think it's the benefit of a holistic accountant that cannot be understated. If you've got a traditional accountant that all they're doing is compliance work, they might not have that network because they've never really pushed their advice beyond the scope of just completing that compliance work, I should say. But the holistic accountant that really takes a much broader approach is naturally going to have experience in lots of different professional spheres and will therefore know who's who in the zoo in terms of, who the best people to go to and most importantly, who are the people not to go to. And you get to benefit from that kind of try before you buy situation where the accountant's already done the hard work of finding out, who is the best person to deal with that matter. And that way, if you're going to invest some money in some professional advice, at least you're going to get a decent return on it. And the amount of times we've helped clients point them in the right direction and to find the right person to solve problems, and it's delivered a huge amount of value, it cannot be underestimated. So there you go. We thought it was a really good case study to share. We thought there was some really good key learnings to come out of this client. We look forward to sharing more sort of case studies around clients as well. And hopefully what it does is kind of demonstrate that holistic approach and the benefit thereof of applying it. And until next week, bye for now.